Welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial market. Sri Lanka's external sector recorded a current account deficit in September 2025, marking the first monthly deficit after 8 consecutive months of surplus. According to the central bank's latest report on external sector performance, the cumulative current account balance for the first 9 months of the year still shows a strong surplus of $1.9 billion. The report highlighted that the country's merchandise trade deficit widened year-on-year in September as import expenditure exceeds $2 billion. The surge was mainly driven by higher vehicle imports, which amounted to $286 million during the month. Cumulative vehicle imports reached over $1.2 billion in the first 9 months of the year. The central bank also noted that the terms of trade improved during the period, supported by stronger export prices relative to import prices. Net inflows from services rose slightly to $2.8 billion between January and September. Tourist arrivals also recorded a sharp year-on-year increase, although earnings from tourism showed only moderate growth during the same period. Workers' remittances continued their positive trend, recording a robust 20% year-on-year growth to reach $5.81 billion in the first 9 months of 2025. Meanwhile, foreign investments in government securities registered a net inflow, while the Colombo Stock Exchange recorded a net outflow covering both primary and secondary markets. Gross official reserves, including the swap facility with the People's Bank of China, remained stable at around $6.2 billion by the end of September, despite ongoing external debt prepayments. The Sri Lankan rupee depreciated by 3.9% against the US dollar during the first 10 months of 2025. Small and medium enterprises in Sri Lanka are set to gain better access to finance through a major reform, the launch of the Secured Transaction Registry. The new system allows businesses to use movable assets such as machinery, equipment, and inventory as collateral when applying for loans. The reform aims to address one of the biggest challenges faced by SMEs, limited access to credit due to the lack of fixed assets, while strengthening country's overall credit infrastructure. Developed by the Credit Information Bureau in collaboration with the Central Bank and the Ministry of Finance, the system was supported by technical expertise from the International Finance Corporation and funding from the European Union's regional initiative. Officials said the digital registry provides a transparent and efficient mechanism for lenders to recognize and record security interests over movable property. This, they noted, will help expand the formal credit market and promote financial inclusion. Chairman of the Secured Transaction Registration Authority explained that Sri Lankan micro, small and medium enterprises having long struggled to access formal credit due to the lack of immovable collateral and the absence of standardized lending practices. The new framework, he said, creates an enabling environment that allows them to unlock the value of their movable assets. In a significant step toward strengthening Sri Lanka's energy security, the Cabinet of Ministers has approved plans to enter into a loan agreement with the International Financial Corporation of the World Bank Group. The $30 million loan will support secure, bearable and sustainable energy project which aims to improve power reliability and promote the country's transition to clean energy. According to the government's official announcement, the negotiations with the IFC are now underway to finalize the loan terms. Under the proposed structure, the funds will be provided by a sub-loan to the Ceylon Electricity Board or its affiliated entities to implement various project components. The minister also emphasized that the financing will follow the guidelines set by the Public Debt Management Office to ensure transparency and responsible debt management. Officials noted that once finalized, this funding will play a key role in enhancing power system stability, affordability and long-term sustainability, marking another step forward in rebuilding the country's energy sector and overall fiscal stability. Sri Lanka is moving forward with a series of 67 public-private partnership projects spread across key sectors of the economy. According to the Chief Executive of the National Agency for the Public-Private Partnerships, these projects cover vital areas such as power, ports, transport and urban development. A new public-private partnership law that provides a comprehensive legal framework for such projects is currently being finalized. Public-private partnerships have been part of Sri Lanka's development landscape since the early 1990s, particularly through build, operate, transfer and build, operate, own models. However, progress had slowed in the recent years. The renewed push for public-private partnerships comes as regional partners such as India demonstrate successful outcomes from the similar initiatives. Public-private partnerships have enabled India to combine private sector innovation with public sector objectives, especially in highways, metro systems, renewable energy and digital infrastructure. Sri Lanka's headline inflation continued its upward trend in October 2025, marking the second consecutive month of increase. According to the Department of Census and Statistics, inflation measured by the Colombo Consumer Price Index rose to 2.1% year-on-year in October, up from 1.5% in September and 1.2% in August. The department noted that the rise was largely in line with the central bank's near-term projection, which target an average inflation rate of around 5% annually. Breaking down the figures, food inflation accelerated to 3.5% in October compared to 2.9% in September, while non-food inflation increased to 1.4% from 0.7% the previous month. On a month-on-month basis, the Colombo Consumer Price Index showed a margin of 0.07% increase. The food category recorded a small decrease, while non-food prices edged slightly higher. Meanwhile, the central bank reported that core inflation, which reflects underlying prices pressure in the economy, rose to 2.2% in October from 2% in September. The bank said inflation is expected to continue a gradual rise toward a 5% target in the coming months, supported by appropriate monetary and fiscal policies. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.52%, the 182-day T-bill rate stands at 7.9%, and 1-year T-bill rate stands at 8.04%, showing no change compared to the previous week. Thank you for watching. We'll be back next week.